Yeah, so my name is Bert Gutierrez. I'm basically the product of middle class immigrants. My parents immigrated from and met in New York City, which is where I was born. They were from Columbia. They grew up in Queens, New York, and then went to the University of Pennsylvania. I graduated at Wharton undergrad in 1983. I went to work down on Wall Street. For a few years, I was basically an analyst, systems designer, and did some trading work on the fixed income desk. And then at some point after the crash of 87, I decided to go see what the other side of the phone was like. So I took a job in all places, Indianapolis or Carmel, Indiana, at a place called Conseco Capital Management. And that was a startup firm. It was extremely formative in my career development. I was one of the initial 5 people, $2 billion in assets under management. When I left, it was over 40 billion, and it probably had a staff of close to 100 people. So I learned a lot about, obviously, institutional asset management, but also, at least for me, a little bit more important was the management of egos, personalities, talented individuals, how to build a team. And then after the Great Recession, I left and joined Atlas Capital. I had known Jono, my partner, for a few years, basically through playing basketball at the YMCA. And he had a sole proprietorship, which was Atlas Capital. And I joined effectively because I perceived it as kind of a growth opportunity. I thought that some of the sensibilities he had as an investment individual with a value orientation coincided with my mindset of how it is that I invest in bonds or had invested or managed portfolios in bonds. And then additionally, we were both had a healthy dose of cynicism about Wall Street products, the creation of products, how it is that individuals can be, I don't want to say taken advantage of, but essentially not get the best value per dollar of fee that you could in an independent manager that had, certain fiduciary ideals as part of its core principle of how to manage money. I'm a big believer in trying to help people manage their money. And I believe pretty strongly in the basic phrase that it's your money and I'm here to help you advise it. But if you want to do something that is against our opinion, it's your money. So we're kind of a unique operation in that we're relatively small. We have quite a good amount of very experienced individuals that have a substantial amount of capital markets experience. Between Ken Fryer, Jonathan Tunney, and myself, all three of us have been CIO of organizations at one time or another. Um, all three of us have kind of managed different types of books of business, but the bottom line is that we've seen a lot of different kinds of markets. And the beauty of, I think, what our organization is it's fairly collaborative. Any one of us at any point in time could run the whole thing, but we each have kind of our own responsibilities within the organization. I think that the one aspect that is probably a hidden benefit to the client is you have very few organizations of this size that have this level of expertise at a senior level. Or usually an organization like this will have one individual that has had a substantial amount of investing experience. And then, they've built an organization underneath them and they'll have their subordinates. But at the end of the day, they're not going to be as experienced as the top dog. And in this organization, you really have several individuals that have a substantial amount of experience. And there's definitely few organizations that are independent registered investment advisors with $1 billion worth of assets under management that have the FX capability or the bond capability or the modeling capability that this organization has. And all of those things kind of coming together. So with regards to the level of expertise, I've told this story kind of to several people, especially when clients kind of ask about, well, what's going on? And this has been a question every once in a while from certain clients over the last 10, 15 years. I mean, the reality is ever since the Great Recession in 2008, we've had an environment in which we've had abnormally low interest rates. And what that really does is it kind of skews the risks profile when someone makes an investment, because if you're comparing it to a relatively low, quote unquote, risk-free rate, which I kind of define as the 10-year US Treasury, well, for many years in the 2010s, that was between 1 and 2%. So that's a historically extremely low interest rate. And so I believe it can skew how it is that any investment professional is going to look at a risk reward profile of X investment, Y investment versus the risk-free rate. And so one of the characteristics that I think we have, given our experience, and I mean, at the end of the day, we're a little longer in the tooth, is that we've seen cycles. We've seen environments where there have been crashes, where there have been drastic moves in interest rates. Well, the notion of a fiduciary, I mean, it sounds kind of pithy. Well, you put your client's interests ahead of your own, and it seems like, well, isn't that what you're supposed to do when you're managing money? But the reality is that we live in a capitalist system, and you have other players in the financial marketplace who don't have to be governed by the rules of being a fiduciary. So net net, they're going to create a product and sell it because their business is to sell products, or their business is to make a net interest margin. So the incentives are going to be different than they are for somebody like us, because our incentive is to try to make our clients do well. Their incentive, if you're not a fiduciary, is to make profit. How you make that profit is kind of ancillary, because at the end of the day, if the client has some success, but they're a high fee client and they pay a lot, then at the end, you're going to meet your objective, which is earning a rate of return on your business. Ours is not about earning a rate of return. Obviously, we have one. We manage with certain governance of what our expenses should be given what our revenues should be. But the primary objective is having a healthy business that can work in a flat fee environment where our interests are aligned with the individual client.